Well, today we are here to talk all about conventional loans and the expert on conventional loans here in Indianapolis and Indiana, for that matter, my friend Karla. Hi, Karla. How are you today?
Hi, Jennifer. I'm great. It's so nice to talk with you today about this.
Oh, well, thank you. We are so excited. Well, I am to talk with you just all about conventional loans. Last month we did a presentation or a Zoom on FHA loans. We learned all about the
Mhm.
different types of programs, and there's so many different aspects to the FHA loan, and it was just such great education. So I'm really excited for you to talk about conventional loans today and just let everyone know what they can do for them.
Yes, thank you. I'm excited too. I think there are so many advantages that I would love to share with homeowners and potential home buyers.
Yes, will you tell everyone who you are and what you do?
Yes, my name is Karla Hendricks, and I am a loan officer with Approved Mortgage in Greenwood, Indiana, and I cover the whole state. So I originate mortgage loans primarily for home purchases, also for commercial and investment.
Awesome. And yes, you are the expert. You're the go-to. So we are excited to learn from you today. Our topic today again, conventional loans, unconventional advantages.
Yes. So, um, let's just start off by talking a little bit about what is a conventional home loan. And before we do, I'm just going to expand my screen just so that I can see a little better.
Sure thing. I need my
So
reading glasses.
I know I probably should have grabbed mine too. So a conventional loan is not a one size fits all. It is flexible, very flexible. It's truly the most flexible of the loan types. Um, some of the main things about a conventional loan is that they are not a government loan. So they are not an FHA, a VA, or a USDA, which, like you said, Jennifer, we talked about FHA, and I feel like sometime soon we'll probably talk about USDA and VA because they have unique advantages. But
Mhm.
I'm so excited today to talk about just conventional. Um, you might think conventional just means average, ordinary, but truly conventional is a super strong mortgage. So some people think that first-time home buyers cannot use a conventional loan, but actually they can. And there's some programs we'll touch on throughout this that are especially to encourage first-time home buyers to use a conventional loan. They can be for repeat buyers, move up buyers, and even investors.
You know what? I want to make sure that I'm going to stop this just for a second. I want to make sure that I actually have the screen a little bit bigger for you because I know that's kind of tough. So let me do that. I want to make sure.
Thank
There we
you.
go. Yeah, because um, listen, it's hard to well, let's see. It's really hard once you're my age to see, and I'm like, let me do this here. So. Let me try it again and see what happens. There we go. I hope that helps a little.
And yes, that's perfect. Thank you, Jennifer. That's
Then
great.
everyone else can actually see as well. So here
Yes.
we go. So
So we can
we'll
flip to the
go through.
next one.
Okay, perfect.
Yeah, thank you. Conventional loans follow national guidelines, so they are not just willy-nilly. We all follow the federal regulations. No matter what lender is using a conventional loan across the nation, we are accountable to the home buyers by following the federal regulations that are set up to protect them. So the conventional advantage, honestly, is that there are a lot of loan options
Mm.
over the lifetime of a loan, meaning, say you choose a 30-year loan, which is pretty usual. oh,
Mhm.
compared to an FHA, it's very likely you are going to save money using a conventional loan. And conventional loans are not just for people with perfect credit. So we're going to touch on a few more of the myths that kind of seem to surround conventional loans and hopefully pop some of those and give you guys some good ideas to go forward with.
Awesome.
So here we go on the myths. Myth number one, there is just one interest rate for conventional mortgages. Actually, no, there are a lot of different rates, and there's a lot of different things that determine your rate. Rates honestly change Monday through Friday. Um, and once your once we have your house under contract, we shop for the very best rate, which is one thing I love about the company that I'm with is that we don't have just one choice. We shop
Mhm.
for across the board for the best for you to lock that in. But there are a lot of things that determine your interest rate for your particular loan. And one is your credit score. So that's something that's a positive because no matter what the market is doing, if you're working to keep your score strong, then that is going to help keep your interest rate lower. Your loan term actually makes a big difference. 30 years is the standard, like we mentioned, but I had a gentleman that closed on his home a few months ago with a 15-year loan, and he got a great rate. It just quite a bit lower than what a um, comparable 30-year would be. Down payment percentage can affect that, and discount points, also known as buying your rate down. If all of the above don't get you to the rate you need, we can always look at either using buyer's funds or even a seller concession to buy down that interest rate.
Awesome.
Myth number two is conventional loans require 20% down. And I'm so glad to tell you that this is not true. Um, Conventional loans actually have some programs that can allow you to go as low as 3% down, which is pretty amazing. 20% has some advantages. We'll touch on that as we go, but it is not a requirement for most people. And conventional
Love it.
loans are not for first-time home buyers. They are. Thankfully, they're just pretty well for everyone. Some programs actually offer first-time home buyers the lowest down payment, which is the 3%, and reduced mortgage insurance rates even. So there are some systems set up in there to really help the first-time home buyer.
And you know what? I am so glad you're covering these myths because this is what the average person thinks. They do think when they hear conventional, I work with buyers, I work with sellers, but when I have a buyer and I think that they hear conventional, what they automatically think is something that their parents or grandparents told them, 20% down. And
Yeah.
here's the thing, there's a lot of education out there, but I think that that's still a thought that people have because
Hmm.
their parents and their parents have told them this, and it's so good to know that yes, 3%, there's 5%. We ourselves used a
Right.
conventional 5%, which was so great. I'm just
Hmm.
so glad that there's those programs because I don't think they obviously always existed out there.
Right. No, I think you're exactly right, Jennifer. And back in 2008, a lot of changes happened after the market had some crashes and there were some issues with mortgages being a little bit like the Wild West. And so that's why federal regulations really firmed up after that time to honestly protect the home buyer. And so all mortgage companies across the nation need to follow those regulations. And a nice change in there is that, 3% down is now available.
I love it.
So another myth, first time buyer means you've never owned a home. I love this because the truth is that if you have not owned a home just within the last 3 years, you're considered again for federal mortgage purposes to be a first-time home buyer. So you can take advantage of some of those programs. Again, if there's been a 3-year gap since you've owned a home. credit scores, another myth, the credit scores have to be above 700. They don't. Truthfully, the higher your credit score is, you're going to see positive impacts because that's going to give you better rates and terms. So definitely do everything you can to keep your credit score high. And Jennifer, sometime maybe we should just have a little talk about that for
Mm.
our home buyers too. Like what can you do to get ready and to keep your, and, push your credit score up. So that'd be a great topic to
Yes,
cover with you
for
sometime.
sure.
Um,
Yes.
but truthfully, there are a lot of conventional programs out there that have a 620 to 640 minimum. So um, I encourage you to have the highest credit score that you can, but don't give up if you think, oh, well, it's under 700. I can't use conventional. Let's just find out. So there's lots of options. Another conventional myth is that all conventional loans have mortgage insurance, known as
Mm.
private mortgage insurance, PMI. Sometimes it's known as MI. You hear a lot of different terms for that, and it lasts the whole length of the loan. This is what I love about a conventional loan. It does not last the whole length of the loan. So if you have a 30-year loan, maybe you buy at 5% down, um, once you get more of your principal paid off, the mortgage insurance will drop off. So the answer to that myth is no, not all conventional loans have mortgage insurance, and no, it doesn't last the whole length of the loan. So we'll touch a little bit more on that on a further slide.
Okay.
And there it is. So getting rid of that dreaded mortgage insurance. Nobody wants mortgage insurance. Why do we even have mortgage insurance?
Hmm.
Honestly, it's in place because it protects the lender. It's an insurance policy, so that money that a home buyer is paying toward mortgage insurance does not go to their lender. It actually goes to a mortgage insurance company that protects the lender against default. But on the flip side, the positive thing is that that's what helps keeps rates lower. Because if that weren't a protection in place for lenders, then the interest rates would be higher to guard
Mm.
against that risk. So that's why it's in place. Not to be confused with homeowners insurance. That protects the actual homeowner, of course. Um, and typically, homeowners insurance is paid monthly as a part of a mortgage insurance payment. So it'll just be put in escrow, paid that way. And it is required on a conventional loan when the down payment is less than 20%. So 20% is not normally required on a conventional loan, but if it's not put down at purchase, then there is a time period of mortgage insurance.
Mm.
So
I
I
think
love
that's a
this little
good
graphic
topic.
here. Did you
Yeah,
notice
sorry.
that?
I love it. Yes, sorry. Sorry to interrupt. I love this topic because I don't think enough is known about mortgage insurance, PMI. I really don't. So
Mhm.
it's so awesome that you can educate everyone on this.
Thanks. I'm excited too. Um, and I love this little comparison chart. There are truly strengths to each of the what I call the four vanillas, the conventional loans, FHA loans, USDA loans, and VA loans. Each one has unique purposes and strengths for different home buyers in different situations. But what I really love about a conventional mortgage is that one, there is no upfront mortgage charge, or I'm sorry, upfront mortgage insurance charged. So if you look at this chart, you'll see that in an FHA loan, normally there is a 1.75% upfront mortgage insurance premium charged. Now it's rolled into the loan, so it's not something that an FHA buyer normally has to pay at closing. However, it does add to their loan. USDA does a similar called an upfront guarantee fee, which is 1% of the loan amount. VA has they have a sliding scale depending on the buyer's what they call certificate of eligibility with the VA. There are different things in there that impact. It can be zero up to 3.3% of that loan amount, and it is called a funding fee, and it's normally rolled into that loan as well. There are reasons for that, and we can definitely chat about that sometimes too, but the great thing about a conventional loan is that they do not charge an upfront mortgage insurance fee like that.
I love that. And that is interesting. And I don't know if this is correct, but I was just thinking about that when you were talking. I was going to guess, and maybe this is wrong, correct me. Maybe some of those other programs maybe have a little more risk to the lender. I guess I don't know if that's correct, but that's what it seems like because a
Mhm.
USDA loan, that's like I don't it's like a 0% down loan. So yeah.
Right, that's exactly right. And so is a VA loan most of the
Mhm.
time. So that does definitely mitigate some of the risk.
Okay.
And to finish up our um, how to get rid of mortgage insurance, um, one way to keep mortgage insurance out of your monthly payment, if you have a loan, a conventional loan, maybe you put 5% down. So you're going to have a time period of that mortgage insurance. If you can't put 20%, then we could look at doing a piggyback mortgage, which is a second mortgage that would close at the simultaneously with your first mortgage. And what that could mean, it could be like maybe you would put 10% down and the second mortgage would supply the other 10%, meaning your main mortgage would be at an 80%. So 20% down, it would be an 80% loan to value, which would eliminate mortgage insurance. Um, and a neat thing is that we can also look at doing a single premium mortgage insurance if the home buyer wants to. This can save money in a couple of ways. It's always good to just compare what can save them money overall. But it can save money being a one lump sum if they choose to, either paid at closing or rolled into the loan. But either way, it would eliminate the monthly portion of their payment. So
Okay.
I love those options. And one way, if you are going to be putting less than 20% down, to have lower PMI or private mortgage insurance for conventional is by using a home ready or home possible program. So these are programs through Fannie Mae and Freddie Mac, and which are kind of the two branches of conventional loans. And they are both aimed at helping either first-time home buyers or home buyers within 80% of the area median income for their county that they're purchasing in. These programs can help lower the private mortgage insurance rate and also lower their interest rate.
Mm.
So super helpful if a person is able to fit into that. And that's something that when we do a pre-approval, we always look for that. Is that an option? Um, Lower premium can come from also putting a bigger down payment. So if you only have a required 3% down payment, but you choose to put 5, you will see that your mortgage insurance rate will drop because again, that's less risk overall for that loan. So it's going to be lower mortgage insurance. And strong credit scores also mitigate your mortgage insurance rates. It causes them to just be lower. So
Got it.
conventional advantage here, private mortgage insurance is not forever. So yes, they do go away. And this is how they go away. If you start your loan with less than 20% down, once you do reach 20% of your loan paid off, or actually the loan of the value of the house paid off, you can request your mortgage servicer to remove it. Once you reach 78% of your loan value, if you didn't request it at 80%, then it's automatically removed. So just something to keep in mind. We always provide amortization schedules when we close a loan for our home buyers. So, or, a home buyer can always just say, hey, what year and month, if I just make regular monthly payments, what year and month would I hit that 80% or 78% loan to value? And love to give them that information. Another option is you can actually pay extra principal to your mortgage servicer if you choose to. Always make your regular payment on time for sure, but you can always make extra just principal payments to get that loan size down more quickly. And another option, which I love, is that if you buy a home, and I had a family buy a home about a year and a half ago, and it was definitely an older home. It had good bones, but it really needed updates. And it's so, a lot of like the kitchen was torn out, bathrooms were torn out, they redid all of those things. And so truly, like once they were done with those renovations, their house was worth a lot more than what they bought it for. So in that case, it takes a new appraisal to establish that. But if you can show your loan servicer through that appraisal that, hey, now I really am at 80% or 78% of the value of my home because the home is worth more after these renovations, that can get rid of that mortgage insurance.
Oh, that is good to know.
Mhm. Great house hack. So, and yeah, I love this too. There's so many varieties of things that you can finance with a conventional loan. And actually, you can finance some things with a conventional loan that you can't always do with an FHA, VA, or USDA. So, lots of flexibility. Condos are easiest with a conventional loan. They can be done at times with the other loan types, but condos will get you there, or I'm sorry, conventional loans will get you to your
Mhm.
condo closing quicker.
Yeah.
Is you probably know, Jennifer, you're familiar with that. I know with condos, there's a little
Yes,
bit more
yes.
paperwork and things involved in getting that loan closed. So conventional loans are just going to be a great route to go for condos. Log homes. Not all loan types will accommodate log homes.
Mm.
Sometimes it's the actual, the construction method there's an issue with, or sometimes it's because there's not a lot of comparables for most log homes to do
Mm.
a good appraisal. So conventional loans, log homes, we can do. New construction, whether it is maybe you're buying your land and using a custom builder and making building a custom home, we can do a one-time closed construction with a conventional loan. Or maybe you're buying a tract home through a builder through in a subdivision, and that's also something we can do. Those can be as low as 5% down. So you really don't have to come to the table with 20% even to to build your custom home. So
Mm.
really some great options there. Townhomes can be purchased through conventional loans. Vacation homes. This is the one that you
Mm.
will not be able to do through VA, FHA, or USDA. If you want to buy a second home as a vacation home, you really will have to do it through a conventional. So that gives you that flexibility. Um, Manufactured homes, there's definitely
Mm.
some um, parameters around this just to make sure that they're not too old. And also the key with a manufactured home is that it is permanently affixed to the
Mm.
ground. So we don't want it to move. If it's moved, it's called a chattel loan, which is not a regular mortgage loan. And I always think chattel sounds like cattle. So you think if it can move, it can't be done with a conventional mortgage. It can't move like a chattel. So,
That's a
um,
good one. Good one.
another great opportunity with conventional loans is a 2 to 4 unit, and you can
Mhm.
buy this either. on a conventional investment loan if you're not planning to live in one of those units. If you just want to buy it to rent it out to others, great. You can actually use a conventional loan to do that with a 2 to 4 unit property. And another house hack is that if you are willing to live in one of the units and you buy, say, a duplex up to a fourplex, you can do that with a conventional loan, and those are actually just 5% down. Now, with the investment property or investment 2 to 4 unit conventional, you're going to see probably a 25% down payment. That's a really different aspect. But if it's going to be your primary home, and here, like you probably know this too, Jennifer, just working with your different clients and what they're looking to do, if it is intention matters. So, whether you want to buy something as an investment versus if you want to buy it as your primary home versus your secondary home, all those things will definitely affect which type of mortgage, within a conventional that we want to do, because we want to make sure we're lining up with all those regulations to keep you safe.
Yeah, I wanted to mention, like you said, when you started with condos, you know, since everyone has cracked down on condos. And when I say everyone, I mean there's a lot more restrictions than there used to be, starting
Hmm.
with that Florida building collapse back years, maybe 4 or 5 years ago, whenever it was. Things are a lot more strict with condos. And you're right, a lot of these communities now are actually not even allowing, and it's not the communities, it's the lender that, or, Fannie or Freddie really saying that FHA loans are not even allowed here. So yeah, it's really important if someone is thinking about a condo, like you said, I think you're so right. Conventionals probably the way you're going to have to go in most cases.
In a lot of cases, yes. There are still a few that qualify with FHA,
Yeah.
but yeah, you're right. Overall, it's going to be just way easier to get to that closing table with a conventional.
Hmm.
Okay, and Jennifer, like this is where I love your input as well. A conventional loan, like we were talking about earlier, has a reputation in amongst real estate agents, buyers, sellers. A conventional loan is just known to be a strong loan. And so I know a lot of times when, as a real estate agent, you list homes and you represent your seller, and just like tell me what you think if you get a if you get maybe two offers in simultaneously. One is a conventional offer offering the price that your seller's asking for, versus maybe one is an FHA offer, which is also a really good home loan. But
Right.
what do you think maybe your seller's first impression would be between those two? Maybe they're both offering the same price for the home.
Yeah, I think the perception out there, and again, like you said, we did a call last month on all the benefits of using an FHA loan, and there are so
Mhm.
many. But I think the
Yes.
common perception is that conventional loans are seen as okay, this is a strong loan, this is a great
Yes.
buyer.
Mhm.
I really do think that a lot of, for example, if a seller got an offer with a conventional versus FHA, I think that they would think for some reason, and of course, a lot of these reasons are, not true, but they would think that, oh, they're more qualified, or, um, you know, um, there's, like you said on here, lower risk, because I think if they've sold a house before, and maybe if they had worked with someone who had an FHA loan, it sometimes it takes a little more time, sometimes it's a little more strict. So I just think that's the perception out there, that a conventional loan is a stronger loan, if you will.
I think you're right. And there are like that we've just been talking about all the strengths of conventional loans, which, I love it. I'm so excited when I am able to qualify my home buyers for a conventional as well as an FHA, as well as USDA or VA, because they all have their really unique strengths. But I do agree with you. I think that when a seller, or I'm sorry, when a buyer is making an offer, a seller might assume that a conventional offer is the one to take, that it's just going to be a stronger, get it to the table loan. So, one thing I did want to mention in here is that there is one difference that we haven't really touched on earlier, but with appraisal requirements. So, when we have an FHA loan, USDA, VA loan, whichever kind of loan it is, when we order the appraisal for that home buyer, we have to let the appraiser company know this is for an FHA loan, this is for a VA loan, this is for USDA, or this is for conventional, because there are actually different requirements for those appraisers based on the loan type. So what you'll see is that the FHA, USDA, or VA loan are going to have a little bit stricter appraisal requirements. So when that appraiser goes out, he's going to have to look for certain things that are going to have to be checked off for that underwriter on that loan to be able to check it and say, yes, this is ready to close. We're satisfied with this, really to make sure that the house is safe and healthy and habitable for the buyers. So it really is a way to protect the home buyers. Um, Conventional loans are going to not be as strict on appraisal. So I think that's sometimes why a conventional offer can be appealing to a seller too, because the appraiser might not come back and say, you have to fix this issue. They may notice these issues and it may devalue the property if there are issues, but it's not necessarily going to be a make or break for that deal to close. So it might just be maybe the appraiser will find an issue and the seller and the buyer are already aware and they're fine with that. Sometimes the appraiser will find an issue that becomes a negotiating factor, right, Jennifer, with the buyer and the seller, if it wasn't something that maybe was already disclosed or known. Um, but the appraisal is going to be a little bit less detailed with a conventional. So it's going to be just a little bit easier to get to the closing table with a conventional appraisal.
Well, I'm glad you also bring this up because I thought of something else. So, you know, we notice that a lot of times if a home is maybe not in disrepair, but maybe the seller hasn't kept up with their maintenance over time or things like that. A lot of times, conventional is a lot easier, like you said, and a lot of times, maybe an agent will talk with the seller about what kind of loan programs um, can be accepted because,
Right.
like you said, with FHA, VA, all those, it's going to be a little more strict. And some of these homes, unfortunately, are not going to meet that criteria, and it may be too much on the seller. So a conventional, you'll sometimes see homes listed as conventional or cash only.
Yes. Yes, you're right. Hmm.
Mhm.
So that is a way to get to the closing table a little bit more simply if the seller knows there are issues that might not pass as standard FHA appraisal or USDA VA. Um, not to not to not to disregard the fact that FHA loans and also conventional loans can have programs in them where you can roll in some renovations.
Mm.
So it's not something we actually had a slide on, but I do want to mention that is an option with conventional loans if some repairs need to be done and the home buyer doesn't have other funds, but we were able to fit that into the loan. We can look at doing a conventional renovation loan.
So is that similar to that FHA 203 loan that we talked about?
Yes, yes, it
Mm.
is. Yes, it wraps
Okay.
in the cost of the repairs and renovations.
Mm.
So, as long as the after renovation value will support that to be rolled in, that's definitely something we can look at.
Well, that's awesome.
Mhm. So it really gives your buyer just so many options.
Yeah, for
So if
sure.
they do buy a house that's as is, or the seller's not able to make repairs, then then the buyer can still do that. And sometimes just all in one loan.
Good.
Mhm. So, pre-approval. I love pre-approving my home buyers. So that is something that always makes my day. Um, and as you know, like we just start off with a chat on what are your goals? What are you wanting to do? And for me, it's not so much how many bedrooms and bathrooms do you want? If that's that's more of a conversation for you. And
Mhm.
but I would like to know, where do you want to live? Is it an area that might support, different loan programs,
Mhm.
and even looking at different counties? Some counties have different property tax rates. So it's just, it's great to have this ability to just chat with my home buyers in the beginning. What are they looking for, and how can I help you get to that goal line? That's what I love about what I do.
I love it. Oh my gosh, I love it. This
Mhm.
is so awesome because it's like we're discussing these things and we are teaching, or you, I'm not doing anything, but you're teaching people about these loan programs. And I think honestly, since I've been in real estate, education is so important. And I feel like there's honestly just, I believe there's just not enough of it for the general public. And it's just so good that we can have these. And like you said, we've done FHA. Now we did conventional. Of course, there's other loan programs, USDA, VA, all those. And I'm just excited
Yeah.
for you to talk about those next. But I'm going to look in the chat and see if there's any questions. But
Okay.
can you
Yeah.
tell people how they can get in touch with you? Because, of course, you're so easy to work with. Who wouldn't want to work with you? I mean,
Oh,
come on.
thank you. Oh, sure. My email address is khendricks at approvedmortgage.com. I believe it's right there at the bottom of the screen.
Okay,
And
yep.
my contact phone number is 317-412-2548. And actually, you can even just go to my company website, which is approvedmortgage.com, and look under loan officers, and you can just find me there. So, whatever way is easier for you to contact me, I'd love to hear from you and get started on your getting you on this home journey. So, what I love is that I'm able to kind of shine a light. Like you said, there's not a whole lot of education going on out there, and buying a home can feel like a confusing process if you don't have somebody walking through that with you, like you do on the real estate side, Jennifer. I mean, you're showing them different aspects of the home, what to look for, what to be on guard for. Um, and so I love to do that on the funding side of, here are your options. And if you buy a home at this purchase price, what will it look like in your monthly budget? Are you comfortable with that? Do you want it lower? Then let's look at lowering your purchase price, just so that a person ends up with really what they want in the long term. There's
Exactly.
usually
And one
also a lot
thing,
of avenues to get there.
exactly. Well, something that I love about what you do is honestly, I feel like you help them understand the options. And I will say, of course, we've worked with lots of people over time, but you are so good at, if someone comes to you and says, "Hey, this is how much I want to spend," or if they don't know how much they want to
Mhm.
spend and they say, "Oh, I don't want my monthly payment over 1,500." That's just a random example.
Sure.
You will do your best to side by side compare and
Mhm.
show them what's available. And honestly, not everyone out there does that, but that to me is so important because that's another part of educating people. The more, and I wish people understood this, the more buyers and sellers know, the more they are going to enjoy the process,
Mhm.
trust us as their, you know, trust us as their partners. Education, it's just everything. And so when you help them by showing them, and no one did this for me, um, you know, it would have been so helpful. And I just am so thankful that you do that for the clients, because I truly believe you care about the clients. And honestly, we shouldn't even be in this business if we don't, right?
I 100% agree. And that's why I love working with you too, Jennifer, because I know that you're truly looking out for your client's best interest. And if they get stars in their eyes about a home, that you're going to be the one coming alongside and saying, be aware, like this might be a potential downfall, or this could be a strength. So you're helping them to really like see so that they end up with a good home.
Oh, yes. And I probably lost more sales, but you know what? It's so important that we're so honest with our clients, that
Yeah.
we help them by educating them. And so this has been a great series. So hopefully next month we can have another one. We'll decide on that soon. But I think these regular seminars are very helpful because people can go back and watch them. And what I'll do is I will obviously post this for everyone to watch. And I don't see any questions in the chat from anyone who's here, but
Okay.
thank you so much, Karla. I know
You're
you're so busy and
welcome.
this is a lot of time taken out of your day, but I really appreciate it.
Oh, I appreciate it so much too. It's been so much fun, and I love to answer questions because the first time that I bought a house, I really didn't know what was happening in the process. It was a little bit of kind of feeling blindfolded. So I just really like to shine that light for people like, here's what to expect in the process, here's what you can do to get ready, and here's what your options are. So
I love that. You do
yeah,
such a good job. Thank you,
thank
Karla. I
you.
appreciate it.
I
Have a
appreciate
great
you
day.
too. You too.
Thank
Bye.
you.